Good weekend all. Ira Epstein of Linn Associates with your agriculture update for this Monday, the 8th of July, 2019, just after 4:10 p.m. Central Daylight Time. As you can see, a mixed bag in the grain markets today. As it turns out, the crop conditions today came out pretty much as the market was expecting. Beans may be a little less in the good to excellent category, but I don't think that's what the market's going to look at. The market's going to look this week, I think it's Thursday or so, for the government report that shows stocks. And that stocks is also going to have acreage. And they're going to try to, I think, adjust the acreage number in corn that they came up with in some manner from last report. And the reason is so many of us just don't believe that more corn acreage was planted this year than last year, given the flooding, the rains, and it's still so wet out there that farmers, at the end of June just couldn't get anything done. So we think there's less acreage. Will that be true? I don't know. They're doing another survey also, the government, but we won't know that survey that comes out until August. So this is going to be a guess game by what the government says. On the energy market, sort of stable today, not going one way or the other actually very much. Stock market down a little bit. So the market's looking at the U.S. dollar, what that might do, how that'll impact all the marketplace, and of course, how the world's doing on everything that's growing right now. As we look at a weekly area chart of closes, what I'm looking at is what I told you could happen back here. When we had rallied, if the market fell back, would it find support against the 18-week moving average? What I'm showing you right now is June 28th, and this is a weekly chart. You then broke down last week, and you can see you're getting a little bit of a bounce today of 3 cents. Over the week, we're up 3 cents. My point is that the market came down to that area, and that's where the market's probably fighting its next battle. Clear this 902 3/4, and I think you can get an outreach for higher prices. It wouldn't surprise me. The question is what will get it up that 30 cents, and it's obviously going to be a mixture of weather, acreage, yield projections, all that coming into play. And looking how the corrections run its course here, I still am not convinced we're going to go back and fill this low gap in the chart. Gaps normally do get filled, but it's such an unusual year and there's so many different things at play. And considering this market's just backed off from against the 950 area, 60 cents, I have my doubts that you're going to go down a total of $1 to fill those gaps. When I look at where the market's at on the swing line, not moving averages yet, you're certainly in a downtrend. You've got the lower highs, lower lows. I define a trend in a downtrend as lower highs, lower lows. An uptrend is higher highs, higher lows. And no trend in some manner would have a higher high and a lower low. In other words, not in sequence. This is in sequence. What else? Well, the market's under the 18-day average of closes, so I use the word bias as a filter for myself. When a market is under that 18-day average, I have a bearish bias, over it, a bullish bias. It's really that simple. Then I look to see where the 100-day moving average of closes is, because so many traders like those. So if this market gets a rally, right now I'd expect resistance in between the two of them, 911 up to 919. To break the downtrend on the current pattern, you'd have to take out 934 1/4. It's only Monday and this is a daily chart, so that pattern can quickly change. When we look at Bollinger Bands, one of the reasons I'm starting to question, does the market have the oomph to go fill that gap, is we're so close to the lower Bollinger Band. That number is 890 1/4. You went to 891 1/2 today, and you didn't quite make it down there. Now, one day doesn't mean you're going to turn and not hit that number, but you're getting to the point where I'm looking for support anyways, just because markets trade within Bollinger Bands 95% of the time. And I have a theory that the first time you hit it on the upside or the downside is where pros often step out of the market. As you can see even here, you came down, you hit it, you came back to it, but eventually you got to bounce. You don't always do that. It depends on the pattern. Here you had a sideways pattern that eventually ran into a downtrend. That's a very different pattern. I can't call this sideways. So I'm saying the market on its break probably has support in that zone just because it's the Bollinger Band. Nothing fundamental at all. In looking at momentum, the other part that I look at here is we're oversold. So I have a market that's oversold, approaching support, has come down roughly 60 cents or so going into some key government reports. In the meal market, you're still in the downtrend with lower highs, lower lows. The market here is a little different than soybeans. Notice that both numbers here are under 20. They were under 20 on Friday, and they were under 20 on, well, that's Wednesday. So Wednesday, let me give it to you right. Thursday was the 4th of July. That's it. Wednesday, Friday, and today. When you have 3 days in a row underneath the lower Bollinger Band, that's said to be embedded. The next thing I look at is where in the range did the market close, and it closed unchanged on the day, but if we look at the size of the range, pretty close to the lower part. So as I see it, until the red line closes back over 20, this market still has bearishness in it. What was a support zone back here at the 100-day average on the rally is most likely to be the first level of resistance at 311.30 should it come up there. Support back at 302.30, the lower Bollinger Band. And in soy oil, you're still in a downtrend, lower highs, lower lows, admittedly very oversold, and admittedly only got 10 points away from the lower Bollinger Band. You closed higher, you may not make it there. This market might want to fight a battle at the 18-day average, and should it clear 28.27, it ends this swing to the downside. It doesn't start necessarily an upside move, but it certainly ends the bear play that we've just had. In the corn, you have this vertical price drop that carried the market down actually about just shy of 10%. And now we're getting the bounce. The resistance, the 18-day average of closes. Momentum is up, bias down, and no trend. You can have a higher high, lower low. In the wheat market, I got a fast finger today here. You got the higher high. You came down to the lower Bollinger Band, just like I'm talking in the in the soybean market, in the soy oil market. You're hitting that lower number and you're getting your bounce away from it. That's the first challenge. Now we get to see what the government reports will do with it. In the corn market, corn failed against the 100-day average a couple of times here. So you now have, with today's action, lower highs, lower lows, which is a downtrend. If the bears are going to support the position, wherever the 18-day average comes in tomorrow would be the number I'd look for them to support. However, should you get over Friday's high of 1265, I would look for the market to then say, if it doesn't make a lower low first, higher lows, higher highs over the 18-day average. Why not put into play going back to 1281? So those that are supporting the short position, I think they're going to have a short leash on themselves. In the coffee market, this is what happens when you get weather markets anywhere in the world. And the weather suddenly got better. Where they're in Brazil, and as it got better, the market today drops nearly 5%, actually 4.25%. Pretty big drop. The market, if you take a look how it was on Friday, you had both numbers over 80. Both were over 80 on Wednesday, but not the day before that. So we had Wednesday both numbers over 80, Friday both numbers over 80. That was just overbought, and you couldn't do anything with that, which is often the case. You don't embed that much. I would not be surprised to see prices get down to the 18-day average if they slide through there, lower supports the 100, and try to steady itself. In the cocoa market, this is an uptrend market that came alive actually today. The market had this pattern of higher lows, higher highs. The key's been to clear a previous big high. So today's high was last week's high, 2509. If it does that, it puts into play the upper Bollinger Band as potential resistance. The market went today to that number, finished 2577, just over that band by 19 points. It's still not overbought. This could be a surprise and kick you a bit higher here. I wouldn't fight that market. And yes, I still say that the first time you hit an upper Bollinger Band, the pros do take some money off the table. In the cotton market, it still looked to me, and looking at the crop conditions, like cotton's okay. And I'm looking, and when I say okay, still growing, the weather looks good for the production and so on. I'm seeing lower highs, lower lows. I see a downtrend. Admittedly, we're in this big sideways pattern. You can see that as defined by the Bollinger Bands, especially. I'll still give the bias down. You're under the 18-day average. The trend down. I wouldn't be surprised if you make a run for the lower Bollinger Band. And yes, I would expect to see pros take some money off the table if that occurs on the short side. In the cattle market, the first challenge of the upper Bollinger Band got thrown back today. Should not be a surprise to you, just the way the market, when it first challenged the downside, got thrown back. Are we trending? No, you're in a sideways pattern with a higher high, lower low, a very difficult market to trade. In the feeder cattle, you're in an uptrend, but basically still in this sideways pattern that you see defined right here. You're overbought. You have resistance at 140.25, supports back at the 18-day average, but if you get much under 136.02, you negate this attempt at an uptrend completely. So got to watch and see what that does. It could break the pattern and create a higher high and lower low. In the hogs, until today's high is taken out, there's problems here. And the problem in hogs is you do know we're in barbecue season. You do know that there's a lot of meat available in the U.S. right now because we lost our Chinese export market and so on. So this market keeps getting a burdensome number to it. We've got the lower highs. Now we have the lower lows. If you take out today's high, this could prove to be a false reading for this attack of these lows, and maybe the market's finally finding its footing. That's going to be, to me, the key this week. Right now, I say the bears have control of the market. You know, one of the things when I try to enter markets or exit markets, when I'm writing my updates for my clientele or going to put out something in my morning videos, I look at this popular tool called a pivot point. Now, I don't look at it every time, so let's understand what it does. But when I see on one of my tools, for example, looking at a Bollinger Band where it's coming in, I also sometimes look at this. And I'll want to know, gee, am I getting up to what we call the resistance levels? Think of the white line, and it's a mathematical formula. It's a three-part video we give you, as the neutral number. Resistance point 1, resistance 2, support 1, support 2. Now, you're trying to catch the market away from that neutral number and hoping it'll swing back to it in some manner. And that's the idea of pivot points. I've simplified it for you, but I'm giving you what it is. So it's easy to add, and what I've done to it is I've added momentum with the slow stochastic, which gives you another, I think, tool to use with it. If you'd like to learn and see this three-part series, it's free. All you need to do is get hold of us. The simplest way is to call us. But if you go to our website under www.iraepstein.com, you'll see our carousel of free offers. Pivot Points is one of the offerings that we have. Click it. We'll make sure you get the video series. I'm Ira Epstein. You have a good day, and I'll see you tomorrow.